In the spotlight this morning is Magnetech Industries, which is in the business of making and selling sportswear and packaging. Pivb research is keeping its outperform rating on the counter, though it lowered its target price to RM2.45 from RM2.65 previously. The stock ended trading yesterday at RM1.91. Magnetech's headline net profit fell in the third quarter of FY22 by 45.5% year-on-year to RM26.7 million, with the packaging segment in Malaysia in the red, coupled with the after-effects of the suspension of its Vietnam government operations. Pivb says after adjusting for one-off items, Magnetech's core net profit came in at RM26.2 million, dragging cumulative 9-month FY22 results below its expectations, accounting for 53% of its FY22 estimates. The research house says the discrepancy is mainly due to the slower-than-expected pickup in manufacturing activities post-lockdown. Looking ahead, Pivb remains wary on the company's near-term outlook, adjusting its earnings estimates downwards by 5 to 21% for FY22 to 24. It said this follows the ongoing global supply chain disruptions and China's new lockdown measures. But while the restrictions in China may hurt Magnetech's major customers' physical store sales, the research house believes the digital-driven growth by the said client will be able to partially mitigate the impact of decreased store foot traffic. On the whole, Pivb is still positive on Magnetech's long-term prospects, premised on the ramp-up in utilization following the easing in Vietnam's lockdown measures, supported by the rising awareness in health and fitness, which should drive global sportswear demand. So what's the consensus? According to Bloomberg data, only Pivb covers the stock. So to recap, that's one buy, target price RM2.45. Magnetech settled at RM1.91 yesterday, so that implies a potential return of about 28%.